Okay, hello, welcome. This is smarthelping.com. I'm Jason, and we are doing the overview video for the fully upgraded used car dealership model. It is awesome. I'm going to go through each tab, explain what it does. Um, at a high level, the upgrades were to add brand new purchasing and inventory logic for revenues, dynamic. You could define how long cars sit on a lot for. It's really, really good, especially for the first 12 to 24 months, or if you're doing a new strategy and you're going to make some big inventory purchases. I also added an income statement, balance sheet, cash flow statement, monthly and annual. We added a ton of visualizations. These visualizations are so cool. I'll go through them at later when we get to the tab. We got distribution, just kind of cash flow analysis, net present value stuff, uh, executive summary, some more advanced stuff with terminal value, uh, a cap table. So really cool. I'm pumped with this. This is one of my most popular templates over the years, and I'm really happy to give it this upgrade. So it will be available for purchase in the link below. $45 one-time fee. I'll also list it on vendor sites. So let's let's go through it. First tab, well, there's the index tab that explains at a high level each tab, and then this video is going to be a link here. First tab, global control. You can put the name of the company here, the launch year, whatever that is, the end month, exit month. It doesn't have to be a terminal value attached to it, but this is just the month operation start within the first. It's a 5-year template, so anytime in that 5 years, you can end operations, and then you can choose to include the terminal value or not based on 12-month trailing EBITDA of this end month. And if yes, you could do the multiple right here, and it'll show you the net proceeds. Now, what's going to be included in this is if you go to the terminal value, you've got the business selling the business operations itself. You've also got potentially the sale of the building, which would be on the capex defined here, if applicable, and value of vehicle inventory at the sale also included. So all that's going to be included in cash flow. The number we show up at on the global control is just this top line number, which is basically just the EBITDA multiple. Then you could define some cash sources if you're going to finance any of the initial startup costs. You can put that here. Any remaining equity required is going to go here. And this actually flows to the cap table. You see the 2.374. And you could define the shares, the percentage of common Class A and B shares if applicable, the contributed equity from any investors, contributed equity from any owners. This does not have to be a joint venture. You could zero out all the outside investor parts and just have owners or just one owner, and define the percentage shares of ownership here, and it'll give you the fully diluted ownership share number of shares, and that's used to figure out the distributions for each individual entity over here. Okay, and then last thing, and then this investor owner, these values are all coming from the cap table. You see total equity and debt. Um, then the tax rates will apply each year if it's a profitable year based on the net income. If you don't want to show tax effects, you can zero this out. That'd be mainly for single owner operators that just want to, basically they're collecting all of the proceeds, so they want to see the effect of taxes on their cash flow. All right, purchases. This is so cool. So this is a huge upgrade. So you can define basically up to 10 vehicle types, and for each vehicle type, you can determine the average cost per vehicle, the markup, then you can see the average sale price, the resulting profit margin, the start month you want to start selling each of these vehicle types, and then here's the first big change. The vehicles purchased per month is defined here for each of the 10 car types. And then down here is the month in which you sell the inventory you purchased. For example, so month N plus one means you purchase it in month zero, and then you can define there's always going to be a 1 month delay at the least. So you can say, okay, I bought 5 cars in month one of year one. It's going to take me um, that's month 0, and then month 1 I don't sell, month 2, and then month 3 I sell a quarter of those, month 4 I sell a quarter, month 5 and 6, and then I finally sell them all there. So you can define those percentages, whatever makes the most sense for each vehicle type. You might have things that sit in a lot on the lot longer. You might sell maybe 10% of your inventory that you purchased in month 0 in month 1 through 10. You can define this dynamically for all 10 vehicle types right here. It's really cool. Um, so there's that logic. You can also do the average fee revenue if you have other fees as a percentage of the sale price of the cars. Also, any fee expenses as a percentage of the sale price per car. And so that's just a kind of a catch-all um, to capture any variable costs and revenues on top of just simply the purchase price and the sale price. I did put aggregates here so you can adjust these numbers. Let's say, so you've got equity here and then revenue, EBITDA, cash flow, cars sold per year, EBITDA per car, gross profit per car. So if I were to change this, let's say I wanted to increase the markup, this would then lower the equity we needed because I'm making more revenue. It would also raise the EBITDA and GP per car. So watch if I change it to 100%. You see those numbers are, the equity needed is going down. The other numbers are all going up. You can see that. So that's all responsive. So we're at 2.371 million equity needed instead of, at 75% margins, you're going to need at 2.374. So not a huge difference there, but a difference. And it will depend obviously on the metrics of each vehicle type as well. So I was really happy with this new logic, this revenue. Cost, this is simple. You define just fixed costs to operate your dealership. These are monthly costs in each year. You can define the start month of each as well. Cap table we went through. CapEx, this does not include car inventory. This would be like a building, or if you have any equipment pieces, furniture, just stuff like that. It might not be relevant. If not, you can zero everything out here. It's just a standard CapEx schedule. The depreciation resulting from that will flow to the income statement as well. Debt schedule, just based on if there are debt proceeds, you can define the terms of that here. It'll flow through. If you do include terminal value on global control as yes, then debt schedule, the amount will be paid off on the end month automatically. As you can see, it is here, and that will flow through to all the statements. Terminal value, kind of went through it. Basically, the only input here is you can define the percentage of the sales proceeds of the business that apply to fixed assets, if any. You can put this to 100%. If you don't have any fixed assets that you're going to apply that sales proceed to, it's just a tax effect anyway. It won't affect anything else. Right now, it's just set to 95 as a default, and you can see that 306,000 will then apply to all of this here. And then the building itself is separate from that activity as well. So you can see the value at sale would be the 306,000 if you sum that up. And then this is the book value, and then you got net gain or loss to go against to figure out your tax percentage. Startup costs, just standard. This would be like legal fees, consulting fees, any fees you spend that are tax deductible that happen before the business operation begins, you can put in here. And then we have our income statement, revenue, cost of goods sold. This is your car inventory. You get your sales. So the cost of goods sold is a non-cash item. Your actual cash flow, which we'll reconcile in the cash flow statement, is your inventory purchases. But when you sell the cars, you have to align the cost of goods sold with the cars that are being sold. So that all this does that, and there's 10 matrices tabs over here that do all of that logic. If you want to dive into that, you can, but that's how it works. You got gross profit, you've got your operating costs, startup costs, EBITDA, interest expense, depreciation, anything on the exit with the sale of the business or fixed assets, taxable income, taxes, and net income. So income statement, annual, same thing, but on an annual basis. Balance sheet, we've got cash, you've got your inventory, which is an important number to see what the value of your inventory is over time. This will greatly depend on your purchase schedule over here, what you define, how long your inventory is sitting on your lot for, and how much you're buying over time. That will all affect your inventory value. Then we've got our non-current assets from the CapEx schedule, accumulated depreciation, long-term liabilities. This is just that debt financing, and then you've got capital invested, outside investors versus founders, retained earnings, owner's equity, liability plus owner's equity, and assets. And you got your check here. Balance sheet annual does the same thing, but on an annual basis. Cash flow, now you can see here, here's your revenue, here's your actual payments for inventory. So this is where we look at the cash spent to buy inventory. You got your operating expenses, interest, taxes, and then we've got net cash effect of operating activities. We got investing activities, and then we've got financing activities. And this shows the actual net change in cash each period all the way to the end. All these automatically update with any changes on the global assumptions for dates and amounts, numbers, all that's all dynamic. Visualizations, I thought this was pretty awesome. So we've got annual revenue, annual gross profit, annual EBITDA, gross profit percentage, total vehicles purchased per year, annual cash flow, monthly cash flow, monthly cumulative cash flow, average gross profit per vehicle, average EBITDA per vehicle. Then we've got vehicles sold per year by type. So I thought that was an awesome one. Revenue per vehicle per year by vehicle type. Vehicles sold per month by type. Stacked chart. So stacked means this is the total amount, and then you can see how each vehicle type makes up a portion of that. Revenue per vehicle type, month per vehicle type, same thing but with revenue. Then you can actually see the count of vehicles sold per month by each type, the revenue per month by each type. And then this is another one that's really, I think the ending inventory balance for vehicle count is good because you can see how many cars are going to be on your lot based on your assumptions over on the purchases schedule. So that's all great stuff. Executive summary, we've got just high-level items, revenues, gross profit, EBITDA, all the cash flow items. You can see everything consolidated here, and this all matches up with all the other statements. We've got some IRR here, equity multiple for the project, for the investor pool and the owner pool, if there is a joint venture. Distributions is a discounted cash flow analysis for the project investors and owners, a little visual for that. Then the monthly details, kind of where you see the assumptions playing out for purchases, sales, cost of goods sold, OPEX, EBITDA, inventory purchases, startup costs, all the other cash flow items, cash flow, and some summaries here. Annual does the same thing, but on an annual basis. And that is all. So I hope you guys have a blast with this. It's anybody looking to get into a used car lot or wants to plan out like wants to do a lot of changes to their existing one for the next 5 years. This is a great template to have. Again, check out the description, the link in the description box below, and I'll see you guys on the next one.